Hey traders, welcome back to another Sunday video talking about trading setups for the week ahead. In this video, we will be taking a look at indices. We'll take a look at commodities like gold and oil. We'll also take a look at currencies to see how everything is shaping up for the week ahead and some top-rated trading setups that I am personally watching in the financial markets. As we get started, all I ask is that you hit the thumbs up button and subscribe if you're new. So first up, I want to address my title and thumbnail because sometimes I get in trouble for my titles and thumbnails in the comment section. Totally understandable, but I got to play the YouTube game so that people can see my videos. They sold. Let's talk a little bit about it. The S&P 500, even though it has hit a record all-time high on this past week, I want to talk a little bit about what I mean by quote-unquote they sold. Well, if I pull up the commitment of traders data, what I like to look at is specifically the latest weekly buys and sells according to the commitment of traders data. Now, this is not some sort of guru magic or black magic or, I don't know, some other third thing, right? This is straight up a weekly report by the CFTC, which shows what institutions bought and sold in terms of futures contracts. And this gives us a really insightful way to keep an eye on what institutions are buying and selling. Long story short, it's not speculation. It's not some sort of magical candlestick pattern to try and decipher what institutions are doing. It is straight up what they are doing, reported by the CFTC. So check this out. When I say they sold, I want to direct your attention first and foremost to the change in long contracts versus change in short contracts for the previous week. Now, why does that matter? Well, when the commitment of traders reports, it shows us, again, the change in longs, meaning did they buy or close longs, right? Or did they add or close shorts? And so when we look at the most right here, shorted things this past week or sold things, right? Check this out. We have the SPX, where they added short contracts dramatically and added a very small amount of longs. We have the Dow Jones, where they added a good bit of shorts and added a little bit of longs. And the Russell, where they greatly decreased long positions and sort of decreased short positions. That's what I mean by quote-unquote they sold. So what about the NASDAQ? We can see the NASDAQ did get a little buying, but the reason I say they sold is because there's a lot of volume between these, the SPX futures trade heavily, and so do the NASDAQ, but there does seem to be more selling on this side than buying. Noticeably, also, oil got sold pretty heavily. They added short contracts here and decreased longs. And if we take a look at some other notable interests, right, gold is a big one on this channel. Gold, they added longs and decreased shorts. So pretty eventful week in terms of the institutional reported numbers. And that brings me back to the S&P 500. Is this thing a sell now that we see institutions offloading some positioning? Well, not so fast. We want to make sure to use our tools to the full extent. So let's make sure we also look at the commitment of traders data history. And let's see if there's a trend here when it comes to something like the SPX. Now, I've selected the S&P 500, and what we can see here is there does seem to be a little bit of a downward drift here in terms of net positioning. Take a look at the long percentage, which is in yellow, and you can see that it has been sort of drifting lower. And the red bars, which is showing short positions versus long positions week by week, right? You can see that the red is taking up more of the totality here, if you will. But let's do a little bit of a full view and take a look at the Dow Jones. Well, yeah, we can see that the Dow Jones is also seeing institutions kind of building that negative or slightly more negative viewpoint on the market, but not so fast. Let's take a holistic view, taking a look at the NASDAQ. You can see it's actually sort of drifting higher. So there's a divergence here. We're seeing the tech-heavy NASDAQ become more favorable to institutions, and the more S&P 500 and Dow Jones, and also the Russell, by the way, getting more negative, right? So there is some separation here. Now, there's specific types of stocks in each one of these groups that may be more prominent. Like, for example, the Dow is more value stocks and more kind of slow and steady stuff. Small caps are smaller companies, right? The Russell, which are more sensitive to interest rates and things like that. And so, of course, the NASDAQ, which is very heavy tech, has been very popular here recently and actually leading the bounce back. So if we switch over and take a look at the NASDAQ, which, by the way, I am bullish on, This thing is on fire, right? You've got stocks individually like Nvidia, and I'm not going to get too far into stocks. By the way, just a quick plug for my stock channel. I had a video. This is a new channel for me. It got 17,000 views this weekend, which for me on my second channel is insane. And actually, that's more views than my main channel usually gets. So watch out. I might be spending a little less time on here, a little more time on the stocks channel. Just kidding. I will not stop posting on this channel, as both topics are passions for me. But if you are interested in stocks, search me up on YouTube. It's TraderNick-Stocks. I know it's a really creative name, but it's my second channel where I will be covering individual stocks in more exclusive nature. I don't do a whole lot of individual stocks on this main channel. So if you're interested in that, find me over there. So NASDAQ specifically on the index level to me looks really interesting if we were to get a pullback. In fact, the Edge Finder is overall giving a pretty strong reading. I believe the NASDAQ, yes it is. NASDAQ is getting the highest rating score on the Edge Finder going into this week. So it is hot on my watch list. However, technicals do look a bit extended here. If we use a really simple tool that I have here, the extension zone, you can see that the tool here showing that we've tapped into sort of an overstretched zone or an overextended area, and we're kind of on the top end of that range here. So to me, I do think that the NASDAQ, the S&P, all of the indices, their trends are very strong, right? We have clear upward trends taking place in the indices. They look very, very good, whether you're using short-term momentum, long-term momentum. I mean, you've got a strong chart here to the upside. But what makes me a little bit cautious about this is that, again, we've had such a good run. I do think that we are due for a pullback, but I'm not going to try and time that. We could go up for another week before coming down. We could go up for 2 weeks before coming down. But I do think that the market is due for a bit of a pullback, and I'd be much more interested with the risk-to-reward profile on the indices on a pullback to something like the 22,000 mark for the NASDAQ and the coinciding levels on the S&P 500. I think this looks like a way more attractive trade to me, and I think the risk reward there is worth it. And you could actually even tighten this up, right, where maybe this is more likely what I would actually do. I would put stops that are a little bit tighter and look to trade a first attempt here and maybe a second attempt here, as long as the Edge Finder continues to give me that bullish confirmation. By the way, I've mentioned several of the tools of the Edge Finder. Just a heads up, this is coming into the last chance to pick up a copy of the Edge Finder for our biggest discount of the year. We are currently offering a 40% off. All the information for this can be found in the description down below. So if you're interested in getting access to the Edge Finder, this is a short-term offer that we do twice a year. We do it once now and once for Black Friday. But for those of you guys who are waiting for Black Friday, I know sometimes people are like, oh, I'll just pick it up Black Friday. You'll give a better deal. First point to make, it will not be a better deal on Black Friday. In fact, it actually might be a not as good deal because we are considering raising prices between now and Black Friday. So if you're interested in the Edge Finder, don't wait. You're probably going to play yourself in that hand. So if you're interested in getting a copy of the Edge Finder, pick it up. All the information for the discount can be found in the description down below. I also wanted to move now to oil because this is another trade that I'm really interested in, or I actually am in the trade. I'm very interested to see what plays out here going into this week. So I actually went long oil on, what was that, Thursday? And on Thursday, we got a nice little push up. We moved higher on Friday, then reversed it. So I do think that there is upside for oil. And some of the main reasons here for this comes down to jobs, right? Jobs data in the U.S. came in really strong compared to expectations. Specifically, I can actually show you some of that data here really quick. So if we were to go to the labor market data section and pull up the NFP report, what we can see here is that we've had a couple in a row stronger jobs prints than expected. So if you're new to this stuff, if you're new to the fundamental side, the blue bar is what actually came out. The red dot was what analysts in the trading community, the investing community, finance markets, they predicted, right? So the best guess was 111K jobs would come out. We got 147,000. And that's been a theme. 4 times in a row, we have had better jobs numbers than what analysts expected overall. And that's not just the only data point in the jobs market that looks good. Here's unemployment rate, which actually ticked down to 4.1%. It's been expected to rise with everything going on, the uncertainties, the interest rates remaining elevated for some period of time. Unemployment rate has been expected to worsen. But in fact, it's actually gone steady. It's done okay. And so then we also had unemployment claims, which are trending down now, suggesting that people are, they're not filing for unemployment as much as people had thought. The red dot again showing the expectations by the market, which have consistently been under delivered on, which is a good thing for jobs data, right? You want less people filing for unemployment. Job openings in the United States have also ticked up here recently. This is another strong hiring point. So you look at all this and you say, okay, so the labor market looks pretty good. So to me, the demand side of oil, which I find to be a little bit more of a predictable thing than the supply side of oil, which is involving like geopolitical outbreaks and OPEC meetings that go wrong or something like that, right? Those are the scenarios in which, supply gets shocked in the oil market, and that's very difficult to predict. But demand side, a strengthening economy in the U.S. or globally is generally perceived as a positive thing for oil prices. And I think that oil, with the technical pullback to this area of support, that bounce off there was, to me, a very strong probability setup. And so could I be wrong in this idea, and could I take a loss? Sure. But the cool thing about trading is it's not about this one trade. It's about the next 1,000 that you take. So for me, I've got a trade on. I think that the risk reward looks good. I think we could continue to move higher. If I'm wrong, I will stop out and take a controlled loss on this U.S. oil trade. So oil is a top contender for me going into this week. I'm also still long gold. Gold is, to be completely honest, it's not my favorite setup right now, but it's a setup that I'm in. I took a trade couple weeks ago now, actually, that I've just been sitting in. I've been ranting about this a lot on my channel here recently, just about the gold going sideways. And you can either be frustrated by the thing you trade going sideways, or you can broaden what you trade. And I definitely have done the latter there, where I trade indices, I trade stocks, I trade commodities, I trade currencies, and having that broad list allows me to not sit here and focus or fixate on this gold movement that's gone nowhere, right? So gold has really been a chop fest here recently, and for me, I'm just going to pay more attention to it when it actually starts moving. But right now, choppy back and forth for 20 days, it's been really hard to, with my style of trading, really hard to capture any sort of meaningful moves or gains out of this. If you're a scalper and you're trading low time frames, then you might have been able to do well. But I actually asked my stream participation to comment or chat. For those of you guys who trade gold regularly, has this been a frustrating period? And there was a wall of people saying, yes, it's been frustrating because, again, gold has been sort of indecisive in either direction. So, it's been, I think my way of approaching that is trade something else, right? So for me, I know some people are like, oh, no, I only trade one thing. Well, for me, I'm a big fan of trading many things, but understanding the fundamentals behind whatever you're trading. So looking at, the economy that could impact a particular currency or a particular stock market or a commodity, things like that matter. And so, I trade a broad list of things, but I only trade them when they are behaving the way that I can find a trade that really matches my criteria. So for example, Bitcoin is actually on the list. Let's take a look at Bitcoin, which I don't know if you guys saw Ethereum this week or weekend specifically. My goodness, have you seen this? So here's Bitcoin, right, doing well, chopping along. Ethereum just ripping up to 3750 here over this weekend, up today about 4+%. Bitcoin, I do like to the long side from a risk-on perspective. I think now 110 looks interesting for a pullback buy, which is a crazy thing to think about. That's a pullback buy nowadays. But remember, we did make a push up to $123,000 a coin, which is crazy. But hey, yeah, I don't make the rules, and who am I to judge whether or not Bitcoin is in the future or not? Clearly, people continue to buy this thing and find use cases for it. And to me, I'm a momentum trader. I like the fundamentals of the risk-on nature of Bitcoin, and I think that the market is generally in a risk-on rally right now. So pullbacks in risk assets, to me right now, look attractive. Stocks, Bitcoin, real estate, all these sorts of things that are potentially going to expand, do well in a positive environment ahead, to me, I think can continue to rise. So I'm looking for pullbacks. Let's take a look at the dollar. Looking at the U.S. dollar, we did get a little bit of a bounce back this past week. Again, a combination of good jobs data, mixed inflation, And I think that strong retail sales numbers that we saw on Thursday sort of acted to put in a short-term bottom for the dollar. I don't think we can get too excited about this rally because this is not some sort of, it's not like we're seeing some rip your face off move higher in the dollar. Could that be coming? Maybe, but I think you probably need to see, a strong round of jobs data and inflation to really get the dollar out of its funk. Right now, you have jobs which look good, right? But then inflation sort of mixed to cooling, which is negative for the US dollar. So there's a mixed sentiment, I think, for the dollar index. And so that is why, path of least resistance for me still remains mostly sideways on this currency. So, dollar index, do I see it continuously depreciating for the rest of the year? I personally do not. I don't see that being the base case. I do think that most likely you get some range-bound activity in the dollar. And so I do think we have short-term further upside in the dollar index to pull back, maybe go back and test the 102 level, maybe even see 104, right? You could see a couple of weeks, couple of months of pullback. We've just had a pretty much one directional move in the dollar this year, which I don't think is likely to just, easily continue. I think you really would have to see a deterioration in jobs data, plus really cooling inflation to get the dollar to really trend lower from here. I do want to take a look at, while we're on the topic, take a look at the U.S. dollar here. So U.S. dollar, what we can see here is pretty mixed, although it has become a more popular trade to short the dollar at the institutional level. So institutions have been continuously accumulating bearish setups, which has been a great call. They've probably done really well in that, but we'll have to keep an eye on institutional money movement going forward to see if they change from here, continue to pile on shorts or start to get long or change directions. So we'll have to see. But if we take a look at some currency pairs on the dollar side of things, you got euro dollar here pulling back, testing into a level of support. Pound dollar, I actually took a small short position on pound dollar, believe it or not. I liked this. Well, actually, I don't know if it's still there, but the Edge Finder did have a bearish setup on the pound dollar. Let's see if it is there. It is. Pound dollar actually got more bearish. Very bearish score of a -9. If we were to expand upon that, what we can do here is we could go to our Forex scanner and we could pull up specifically, I'm going to search up the pound against the US dollar, which is getting a -8 score. And so when we look at this, what we can see is that most of our economic metrics are favoring being more on the bearish side. And so when we look at things like inflation statistics, jobs data, etc., it is favoring some strength for the dollar relative to the UK. And so I actually got a very small short position on a lower time frame. I was looking at the 4-hour chart. We pulled back. I got short. And so I am still in that short position on the pound dollar. I'm thinking that we have room. I do have this scenario mapped out where I will either get a secondary short position set up if we make a push back towards those highs, as long as the edge finder still, marries up nicely with it, or if we just make a shoot down lower, I'll look to take some profits off. So I'm willing to kind of dollar cost average. I do think that this move has become a little bit stretched, especially with the fundamentals we just discussed. So if you get a pullback, that may be a bigger term picture for me to look for shorts on the pound against the US dollar, but I'm already in one myself now. So we'll see how this plays out. I have several currency trades open that I'll be discussing in more detail. Of course, keeping everyone updated. That is in our VIP room, sharing updates on the trades there. If you're interested in the VIP room, by the way, link is also in the description. You can get notified anytime I take a trade on the Forex trades that I'm doing, gold, silver, oil, indices, even stocks and options. So I trade everything, and I share it all inside of our room. It is a private VIP service, so all the information to sign up if you're interested and want to take your stuff to the next level with us can be found in the description down below. So here's dollar yen. Dollar yen has been very range bound here. I do think that dollar yen's upside, my personal opinion on this is I think it is limited. If there was one currency against the dollar that I would be pretty hesitant right now to really short would be the yen, right? So if I'm looking at the dollar yen, talked about this before, but I'll show you this just for fun. Let's go to interest rates data, and I'm actually going to go to interest rate projections. And what I want to do here is I want to just filter just for, let's take out Europe and UK, and we're going to look at the US versus Japan. The big theme, and this is definitely longer term, this is not like a short term idea. We can see the US dollar or the US projected interest rates are expected to fall going into 2026. Meanwhile, Japan is expected to actually hike their interest rates. And so we see this divergence, right, where I believe that this could strengthen the Japanese yen and actually weaken the US dollar as a big picture theme between now and, end of 2026. So when you ask me about the yen, right, you asked me about the dollar yen. Nick, are you bullish or are you bearish on this? I would say I'm kind of neutral to slightly more bearish on this currency pair than not, right? So dollar yen has really stretched up into this area of resistance. We'll see how 148, 149 reacts. But I could be wrong, but I don't believe this is currently a setup on the Edge Finder. Let me just check. Dollar yen. Yeah, so I don't believe dollar yen. Let's actually just really quick, I'm going to go to top setups, eco only. And I'm going to take a look at just our major currency pairs. Yeah, dollar yen, we'll see what the score is. Dollar yen's getting a neutral 4 score. If we take a look at eco only for just a second here, and I just want to look at major currency pairs, you can see dollar yen is getting a -1 score. So it's pretty mixed. That's comparing just the economic data. What I did here, by the way, if you're new to Edge Finder, I went to the top setup simplified page, which just is the top setups overall page, but just simplified and made bigger with less columns. The eco page, however, is just looking at the economies of the two currencies or the two, US dollar versus gold, et cetera. But the top setups eco page has dollar yen at a -1. So it's not a super strong reading. What we can see here is PMIs have come in stronger for the US dollar, but GDP came in better for Japan, kind of resulting in a net neutral reading. But the way I would see the dollar yen would be, neutral at these levels. But if you do continue to push higher, 151, 154, these levels from a longer term perspective would be areas in which I would be more interested. If if you forced me to give an answer, I'd be more interested in shorts at these levels than I would be in longs. The story on dollar yen has changed. Over here, when we got this crazy uptrend, the dollar yen was doing this because the Fed was hiking interest rates and inflation was out of control and nobody knew how long that was going to go on. And so people bought the dollar and they sold the yen because the Japanese yen was not looking to hike interest rates nearly as aggressively as, the US. But now it's a different story. We just got done discussing, we looked at our projections, right? Clear as day, the U.S. is expected to lower interest rates now, and the Japanese are looking to hike interest rates. So the divergence from a currency trader's perspective to me is a longer-term interest rate differential that I think will play out. So I do think that the path for dollar yen in coming years, yes, I'm talking years, is probably lower in my personal view. I could be wrong, right? Something can change. Maybe inflation flares up again in the United States. But if you ask me path of least resistance, a year from now to 2 years from now, is dollar yen higher or lower? My path of least resistance would be lower. I don't know how low. Like it may go down a lot, it may go down a little bit, might go down very little to none. But I think that this is the more likely scenario than higher. Now, one way that you could play this, and not to get too far off track, is if you don't know how far, but you want to be super long, a long-term focused, right? Some traders will actually do this through options, and you can do futures options. For example, you could essentially buy the yen, which would be the same as shorting dollar yen, or not the same, but similar trade. I think it's 6J or 6Y, whatever the currency future for Japanese yen. I don't trade futures personally, but you can trade that futures contract. You could essentially buy puts or sell calls, betting that maybe the way I would play that would potentially be like selling calls a couple months out and potentially building that trade, or just buying long dated puts out a year from now. There's ways you could do that, right? I could be wrong. Those puts could expire worthless if I were to buy some. But the idea would be actually, I'm sorry, it would actually be buying calls on the Japanese yen long dated out or selling cash secured puts or something like, or no, I don't think you can do cash. I think they're all cash settled the way futures are. Somebody correct me in the comment section how that works. But you can do options on currencies, and it's a really interesting concept. Maybe someday I'll get into that. But I do trade options. I do trade currencies, but I don't trade options on currencies. So maybe in the future. Anyways, let's see. Anything else? I want to make sure I don't miss anything here. Let me just remind you as we close out here today, do not miss that opportunity to pick up a copy of the Edge Finder or our VIP service for 40% off. All the information can be found in the description down below, and I do hope that you'll join us if you have not already. And if you made it to the very end, I wanted to give a quick plug here today to DNA Funded. If you guys are not funded already and plan to be or want to be, check out DNA Funded. They're linked in the description down below. And as you can see on the screen right now, there is a promo code down there. It's A1T20. That will get you 20% off any of their challenges. Also, they offer payouts in as low as 7 days. They offer profit sharing up to 90%. And this is great for swing traders. They offer unlimited trading days on 1 and 2 phase challenges. You can trade 800 different assets plus. So check them out. All the information can be found in the description. Look for that promo code. That's A1T20 for 20% off. Thank you so much for watching this video here, and I do hope you have a great trading week ahead.